Hey guys, how are you? Vladimir Ribakov here from Traders Academy Club. This video is a weekly performance review of the sRs Pro and the sRs 2 for the previous week 18th to 22nd of November 2019. The purpose of this video is educational, is to explain the logic and the analysis behind the trades we take, to explain what are the steps we do, how do we choose the pairs we are going to work with, and explain the setups themselves and the rules of the systems, of course. The idea is very simple. We pre-analyze the market, we choose the instruments we want to follow, and then we wait for the system to alert us to go and trade it. So right now I would like to go to the main website, the sRs Trend Rider, and to review the trades took from the previous week and explain them, of course. Just a quick note, all those of you who are following the sRs, don't yet have the copy and would like to get the copy, then right now we have a very special offer for you. This is the Black Friday offer. You can follow this link, or the link you can find below in the description, below the video, or in the pinned comment in the comment section. And basically you can get your sRs with a very special offer in a Black Friday and a Cyber Monday. So the first trade I will start with the sRs Pro. The first trade from previous week was the dollar, that's the sRs 2, excuse me. So I go to sRs Pro. You can switch here the tabs, right? And the first one was the Australian versus the Kiwi, which now I see there is a problem with the image. Anyway, the idea behind this trade was these two waves and the breakout. Everything lined up for us from the higher time frame, daily, 4 hour and 30 minutes, and the expectations were to see the pair moving lower. Lower highs and previous lower lows are yet in play. We expected to see that going lower. So this pair delivered. We have problem with the image for some reason, not sure why. Anyway, this pair delivered the move to the downside. Would like to explain the logic behind this trade. So according to the daily time frame, we had a triple cycle. After the break of the major trend line, we became bearish, expecting corrective cycle. And on the 4 hour chart, we were developing. Let me just go to the 4 hour chart first. Here, on the 4 hour chart, we got these two waves, and then the correction. We got no divergence or any signs against us, and that's why the expectations was to continue and to ride lower. So that's the logic behind the Australian versus the Kiwi sell. Starting from the higher time frame, going through the lower time frame, no signs against on the ongoing trend, no divergences against, expecting the deeper corrective cycle to continue, and here we are right now on a very important level. Right, so sells now, for example, wouldn't make much sense. Sell all the way down to there would definitely do so. Okay, the next is the dollar CAD. Actually, two following trades, one on the 20, one on the 21st. First of all, the setups themselves. What do we have on the setup? 3 higher highs, higher lows, bullish pattern, 2 waves retrace. Beautiful hold of this supportive zone, as you can see. 4 hour chart and the 1 hour chart on the sRs monitors following the sRs candles are very, very, very strong to the upside. The sentiment and the momentum with us, and the classical setup that speaks for itself. Breakout above the ABCD correction pattern and the falling trend line to deliver the expected move up. As per the analysis, what did we see at that moment? So watching on the developing cycle and the developing trend to the upside, we had a very strong area we were heading towards, and this area is right here. So we move this just close this update here. We moved to the downside to develop a bullish hidden divergence inside this rising channel. bullish hidden divergence for trend continuation. Trend was broken and the high was broken. No signs were developed against, and the view here was very, very simple, looking for buys for trend continuation. Once again, in a developing trending structure by creating higher highs, higher lows on a higher time frame without any signs against, we received an amazing opportunity to join this ride, and so it was. And same with the next setup. That was the first one here. Then we got another one delivering the same opportunity and providing us also a hold of this rising structure. So the decision was pretty easy. We were heading towards the zone I showed. In the second trade, take profit 1 was delivered, take profit 2 closed on break even. Next trade was the pound versus the franc. Now this trade we were late actually, because that was the ABCD pattern and the breakout was here. In that case it worked better for us because the price improved few pips, as you can see. Of course on lower time frame you can go and do this, but the main thing here is again the bullish trending condition that this pair had and the main two waves correction to hold this massive supportive area and ideally to continue higher. As from the general analysis, why did we choose this pair for a trade? Let me just find when I put it here. So on the pound versus the franc, this is what we got. This was a ranging condition, as we all remember the past few weeks. And then we got the breakout out of it, making here gaining momentum to the bullish direction by creating higher highs and higher highs on the MACD histogram. And the idea from there was pretty easy. No signs against, so drops and buys. And that's pretty much where it fits in, drops and buys to expect a further continuation, which in that case delivered and delivered successfully. Euro dollar buy, this was the setup. So what and why? First of all, once again, the ABCD pattern is the one that speaks here. We do not have trending structure on this time frame at that situation, so it all happens from the higher time frame analysis, and we were riding it right here, expecting to see the completing rally that will create a divergence. And that's exactly what happened. We got this move up and then the divergence was completed. Well, in that case we were lucky as well, because it reached the profit before the turnaround started to happen. Of course, turnaround could start earlier and then we would finish up with a loss. In that case, our direction was successful and it hit the profit. What is important here, I want to pay your attention to, is the importance of the Fibonacci's level and the clearance zone, the zones of the previous trend. So the previous trend down was this. Clearance zone is the most recent high. Right? So in the majority of cases, these levels would be tested. Now, pay attention where the Fibonacci of this move down fits in. The 50% is right next to it, right? That's why the expectations to get this move towards this zone was totally understandable, especially before we got any signs against, right? So it was a very easy decision in that case, and this buy again, it's delivered. No signs against, in trending conditions, and voila. Dollar yen and dollar franc are already into this week, so we'll be talking about them later on. But before that, the last two trades from previous week, dollar franc to the upside, a little triangle breakout here in this scenario with a bullish trending structure by creating three higher highs, three higher lows. And what we can see on this pair, dollar franc, here we are. What you can see on this pair, that we are moving in a bullish structure, expecting that to continue higher. We got the move to the upside, no divergence against, as you can see, only gaining momentum, right? Higher highs, higher lows, deliver inside a bigger scale of a channel, and basically it was again easy decision, no signs against, and the buy here was with the break of the consolidation triangle, and of course the hold of the most recent trend line. Here we go, and the supportive zone. So again, the decision here was pretty easy, and this pair delivered. And the last one from previous week, the euro dollar sell, that's it now after the turnaround, as I showed you before. The euro dollar, the divergence completed. Let me now just remove that. Divergence completed. We are after corrective cycle to the downside. The was again very easy call. So we got here the structure of lower highs, lower lows, and basically you can see that the correction started deep here, a lot of zigzags in play, and this was the place where we got a beautiful pattern A, B, C, D correction, and now we are building up the structure of the lower highs, lower lows in play, two waves correction. Finally everything got lined up here, and here we are pushing to the downside. So that's the previous week from the SRS Pro. These trades, as I said, it's the current week. I will explain them in the next week when I will be reviewing this trading week. And from the SRS2, there were a few trades as well. Dollar versus the oil, the WTI in a sell. The idea here is very simple. A triple cycle with the false breakout and a bearish divergence. Let me just show you that. Here. And the bearish divergence that came in play. It was a massive divergence on a completed cycle. Next to also, followed with the bearish divergence from the daily chart as well. So the expectation was to see corrective cycle, deep move down in two waves or some sort of a range here, and it was a kind of easy decision here with the move down, and it delivered. Next one was the pound Aussie for the buy. Now I personally was not in this favor, but my guys got it correct. So as you can see, sometimes I disagree, and yet good things happen. So that in that case, I'm very happy. They didn't listen to me. What do we have here? A classical structure of white. So let me just play with the width here. Classical pattern of the trend: higher highs, higher lows, two waves correction, breakout. Easy decision technically speaking, and this pair delivered. Now the reason I disagreed on that is because, let me just try to explain here, because we started to develop some sort of warning sign with a slowdown of the divergences. Now they notice that there are no lower lows, lower highs anywhere yet, and that's correct. But again, me personally, I don't love to go against divergence, especially close to previous highs. They claim that it has the ruin. Eventually it has, right? So it worked pretty good. Again, that's the reason why I disagreed in that case. I'm happy they didn't listen to me. So that's pretty much it. Cut franc to the sell. A trade that speaks for itself. I think so. Lower highs, lower lows for a bearish trend, two waves correction. Easy decision here, classical trending structure, which fits perfectly in the developing cycle we had here. And the reason for this sell is because if we watch on the daily time frame, after the triple cycle to the upside, we expected 2 waves correction down to the 50%, and that was pretty much easy decision here, nothing else to say. A classical sell, and paid beautifully. New Zealandian Canadian was another buy that we decided to take. New Zealand Canadian, of course. Bad habit. And we got a ABCD here, and of course on the lower scale we can draw it differently. Bullish trend pattern, 3 higher highs, 3 higher lows with 2 waves correction. False breakout on the bottom with the hold of this supportive zone, and mainly the higher time frames that have a clear trending structure for us. So without any doubt, easy decision for the buy, and this trade also delivered straightforward. The last one was the New Zealand dollar, and the idea here is pretty much the same. We got the 3 higher highs, 3 higher lows, 2 waves correction, breakout, stop is below the most recent low, and the high next to the previous resistance zone. Now from the higher time frame analysis, that's what we spotted and that's what we saw. We are moving in the daily rising channel, and from the analysis that, well, I explained it in the live trading room, but from the analysis we got here, we are in a bullish pressure, under bullish pressure with this divergence, expecting the daily to be the corrective cycle. So my assumption was that this is the first leg and the second one is developing now, and that's what we choose to trade. And of course the lower time frame delivered the higher highs, higher low structure, so buy retraces was an easy decision for us. Again, this worked and worked pretty beautifully. So the previous week was simply fantastic. It was very trending conditions on the majority of the instrument, and that's why you can see the system delivered in trending conditions with high momentum and strong moves. SRS is probably the best tools you would want to have in your arsenal, without any doubt. When the market conditions are trending and obvious, SRS solutions are simply amazing. So that's pretty much. Thank you very much for the time watching this video. I hope you find the explanation useful and helpful. Mainly, you understand my logic. Why do we choose to trade the pairs the way we do? If you have any questions, let me know in the comment section below. And once again, I would like to remind you, SRS, along with all the rest of my work, is available for you in the Black Friday offer. You just scroll down, read the conditions and the instructions, and choose the systems you want to work with. This offer is available for you until the 3rd of December, and that's pretty much it. So once again, thank you for your time, and I'll see you in the next videos. Yours, Vladimir Ribakov, Traders Academy Club.